Latest lending data from the Bureau of Statistics shows that while loans to home buyers, like particularly first home buyers, are rising, loans to investors across Australia, generally speaking, are falling, but not everywhere. One of the places where lending to investors for real estate purchases is still rising strongly is in Queensland, and there are major reasons for that. One of the key factors is that investors out of the major cities like Sydney and Melbourne are well aware that those markets are no longer rising and prices there are very high and yields are low, and they're looking for attractive alternatives, places where prices are a lot more affordable, rental yields are a lot more attractive, and there's prospects for future growth. So Brisbane is one of the targets for investors, and that's one of the reasons why lending to investors for purchases in Queensland are rising. But there's also regional Queensland to be considered. One of the strongest markets in Australia right now is the Sunshine Coast, where based on a very strong local economy and more than $20 billion in spending on infrastructure projects, is creating strong demand for real estate, particularly at the top end of that market. So we're seeing prices rising in the last 12 months in double digits, and some of the upmarket suburbs are rising more than 20% at the moment in annual terms. We're also seeing markets like Mackay are recovering strongly from a previous downturn. Vacancies are down, sales activity is up, and prices are starting to rise. We're seeing major recovery happening in many of the resources-related regional towns and small cities throughout regional Queensland, places like Emerald, Chinchilla. We're finally seeing some glimmers of recovery in Gladstone, which took a sharp downturn because of developer oversupply, notwithstanding the major gas projects that were under construction there for several years. So the theme for regional Queensland is solid markets like the Sunshine Coast, Townsville, Toowoomba, performing either very solidly or extremely well, and recovery in the resources related projects. So prices are now starting to rise again in those markets and sales activity is picking up. And then we have Brisbane, where we expect Brisbane performance to be much stronger this year than it has been in previous years, because many of the ducks are now falling into line that underpin the performance of real estate in any market. In terms of Brisbane, we're seeing the population data favouring southeast Queensland again. We're seeing the state economy picking up. We're seeing jobs being created. And in particular, there's been a significant uplift in spending by the state government on infrastructure in Brisbane. And that's been one of the factors that's missing. So those factors, combined with the affordability comparison and the yield comparison, you compare Brisbane in particular with Sydney and Melbourne, prospects look strong for Brisbane and Queensland generally for real estate in 2019. It's going to be one of the places that real estate investors around Australia look to achieve affordable purchases at good rental yields with prospects for strong growth. We've just published our 2 Queensland reports, the top 5 Brisbane Hotspots report and its sister publication, the top 5 regional Queensland Hotspots report. They're available together in what we call the Queensland bundle at a discounted price. So I recommend that you get the bundle and read the 5 locations in Brisbane that we favour the most and the 5 locations around regional Queensland that we recommend the most highly. That's it for now. Terry Ryder from hotspotting.com.au signing off. Let's do it again soon.